It's that time of year again, year-end tax and financial planning. You're going to want to stick around. Welcome to the Lowdown. Hey everybody, welcome in, and I got here the guru of financial and tax planning, and I couldn't think of a better person to bring into the show but Scott Bishop. Scott, I don't want to start about all the initials after your name, but it's quite a bit. And you know what, you are, I think, one of the best experts as far as these two subjects. And I thought today, at least we can cover, I know we can't cover everything, but they can get your guides. And at the end, if you don't mind, just telling everybody where they can actually go and get the guides to this. But why don't we kind of hit what are the things people should be thinking of between now and year end for tax planning and for financial planning?
Well, the real thing is, what are you trying to accomplish? The first thing you want to look at is what has changed in your life. Have I moved? Have I changed jobs? Have I added a family member? Have I gotten married? Have I gotten divorced? Are kids going to college? Have they exited colleges? All those life cycle events have potential financial planning and tax possibilities.
Hopefully not all of the above.
Well, again, there's too many stress points people can take. But it's always good things to think about. And one of the most important things and why we put out these guides at the end of the year is we feel here at Avidian Wealth that it's a great time to sit down with your tax and financial planning team to make any decisions, because many of us, whether it be for financial planning, things like making gifts, whether it's gifts to family members, whether it's maybe large gifts like maybe a business succession plan or transferring of partnership or other types of interest, whether it be giving to charities. Many of these things are January to December 31st types of things. So if you sit down with your CPA, like a lot of people do in February or March or April, you've missed many opportunities.
True.
Right now, many of our clients just filed their tax returns on October 15th. They probably feel down, they probably feel depressed, they pay too much money. You don't want to have that same conversation again next year. So the time to sit down is probably as soon as you can. Not Christmas, not January, but sometime now. Give your CPA a call, give your financial planning team a call and say, hey, let's sit down. And they might say, what do you want to talk about? What you should do, and we'll have it put at the bottom of this video, but we'll also have it on our website at Avidian Wealth. You can go there, go to the search bar, just type in year-end, and you'll find both of the guides. They're great guides. There's one specifically on financial planning things to consider before year-end, and there's one with an entire income tax planning checklist. And these aren't short. There's tons of stuff you can look at. There's hyperlinks. There's 6 to 14 pages long, so there's something for everyone in here.
Well, what are some of the most common ones right now that you would probably highlight if you had to just pick maybe a good 5 or 6 of them? What are some of the big ones that you would talk about right now?
Well, some of the things can be really good. One is we still have above-the-line charitable deductions for $300, $600 for a married couple. So for people that can't itemize for charitable giving, what a great way to give back and to get a tax benefit for it. Other things. We found out for people that inherited IRAs, if the person that passed away after January 1st, 2020, gave you an IRA, and they were over the age where they had to be taking required minimum distributions themselves. So these people were over the age of 72. You are required to take required minimum distributions. Oh, and by the way, you really had to do it in 2020, 2021, and 2022. But no one knew about it till this year. So the IRS has basically waived all prior penalties. You don't have to do one this year. You may want to. It's a great thing to talk about with your tax and financial planning team because these RMDs can snowball on you.
Correct.
But if you don't take one next year, it's a 50% penalty. So if you were required to take a $10,000 distribution, not only did you have to do that, and not only do you have to pay income tax on it, now you're going to have a $5,000 penalty.
Ouch.
On top of that. So all of these are things you need to do. So I've heard stuff about that because people didn't know about it. It's just hot off the presses. Other things that people need to think about, it has been a very volatile time of the year. Some people have stock investments that may have lost value. If you have other gains you may have done this year, it's a great time to harvest tax losses. And we know a lot of clients don't want to turn unrealized losses, paper losses, into real losses, but if it can help reduce your tax liability, why not? If you have a tax loss on a certain stock, let's say it's Microsoft because you bought it a little late and it lost value, but you made money by selling ExxonMobil stock, why not sell enough or maybe more of your Microsoft stock so that loss, that realized loss, can offset the gain? For most people, you're either paying a 15% tax on that gain, a 20% tax on that gain, or possibly up to 40% tax on that gain, Why not avoid that gain by actively and proactively harvesting it? Other things, many people have mutual funds. In years with a lot of trading, like we've seen this year, those mutual funds have outsized capital gain distributions. You know, we've looked at it for every single mutual fund in our portfolios. Talk with your financial advisor. Those things come out between now, typically in December 15th. So if you bought a mutual fund for $100,000 and it's only worth $90,000, that already stinks. What if you got a bill because they gave a 20% capital gain distribution and you actually have to pay a taxes on a $20,000 capital gain on something you lost $10,000 on?
Not happy.
That's not happy, but those are things you can rectify if you know that answer before those gains are distributed. Other things, many people got into the crypto game late. It just happened. I'm not making a comment on that right now, but one thing that you can do that you can't do on the stocks, and I'll come back to that, you can actually sell the crypto for a loss and immediately buy it back again. There's something called wash sales. So if you bought Bitcoin for $60,000 a Bitcoin and now it's worth $20,000 a Bitcoin, make my math easy, that's a $40,000 loss that you can realize.
Just take it this year.
Take that against gains and immediately buy it back again. So you weren't even out a click. And if it pops up to 40 again, you've missed nothing. With those losses we talked about, whether it be stocks or mutual funds, that has a wash sale rule. If you sell it, you can't buy the same investment back for 31 days. You have to be at risk. But that doesn't mean if you sold Growth Fund of America because it lost, you couldn't immediately buy Fidelity Growth Fund. Or the S&P 500 Index ETF. You can buy something else. You can't buy the same or equivalent fund. So you need to know those rules. Again, don't do those things without, if you're not an expert, what are the driving things? Where you don't want to take and do all those crazy things. Find out what the rules are. Don't do what I've had clients do, is they sell it, think they realize the loss, buy it back again, and only find out in January when they get their 1099 reports that it's a wash sale and they've lost it. I had one client that did that for significant trading that they did and actually left $1 million of losses on the table. Wow. That they could have actually realized and saved them a significant amount of money in taxes. With crypto, those are the types of things you have to do. One other thing I've heard is somebody actually was on the Financial Planning Association forum and he posted, hey, one of my clients lost their crypto wallet. You know, where you could actually put in cold storage of crypto. They can take that as a casualty loss, right? Because it was probably stolen. And someone immediately said yes. And I'm like, no. You used to be able to take a casualty loss, but that was an itemized deduction that was taken away with the Tax Cuts and Jobs Act. That's not available unless you are in a declared disaster area. You can't do it. It's the same reason if you total a car, you can't take that on your tax return. It's treated the same way. It's property. It's not a capital asset for those types of purposes. There's so many things to think about in those areas.
So Scott, let's recap that. For one, I think a big one you're talking about is if you have any potential losses or gains, you want to take advantage of that before the end of the year.
Correct.
Another big one was looking at if there's potential distributions from mutual funds that could create more taxable income, right? You probably want to look at when those are going to come out. You could sell that prior to and then buy back something else that's very similar, and you can avoid that. So that helps additional taxation. And then, of course, if crypto, as we all know, it's been a pretty big disaster, but you know there is no wash sell rule, which means you don't have to wait to 31 days like you do stocks and bonds. You can sell that immediately and immediately buy back and go ahead and take those losses in this year.
And those are some great tidbits. Again, there's dozens more in these guides. And these year-end guides we'll post at the end of this video. But you can go to avidianwealth.com and type in year-end in the search bar. You'll see both of these. One's the year-end tax planning checklist. The other one's the year-end tax and financial planning ideas. They're updated every single year, so they're kept up to date, and they're a great resource for you to review. And if you think any of them are applicable to you, meet with your tax and financial planning team now, not next year.
Always great advice, and thanks for coming on. You can get all the guides, everything in the description below, and also make sure to like and subscribe. Thank you for listening to The Lowdown.